Donald Trump promised a boom in American factories, but the real boom came from Silicon Valley. AI, not steel, is arming the new market.
USA News. Hey everyone, and welcome back to the channel. Since the last US election, we've seen the S&P 500 skyrocket by an incredible 18%. On the surface, it feels like we've seen this movie before, a pro-business atmosphere fueling a market rally. But when you dig a little deeper, you realize this isn't just about policy. This is a story about unprecedented volatility, artificial intelligence, and a market that's being pulled in 10 different directions at once. So today, we're going to count down the 10 key forces that have created one of the most unexpected and perhaps misunderstood bull runs in modern history. Let's get into it. Coming in at number 10 is what I'm calling the AI euphoria factor. This rally isn't being driven by the entire market. In fact, more than half of the S&P 500's total gain can be traced back to just a handful of technology giants. Why? Because investors are looking at AI and seeing the next industrial revolution. We're talking about machines that can write their own code, create stunning media from a simple prompt, and optimize complex systems on the fly. This belief has triggered a massive shift of capital, with money pouring into tech innovation and flowing away from more traditional sectors like manufacturing. It's a gold rush, and the AI pioneers are the ones selling the shovels. Next, at number 9, we have trade and market whiplash. The past few months have felt like a roller coaster, with unpredictable trade announcements keeping everyone on their toes. Every new headline, every late-night social media post acted like a mini earthquake for the stock market, sending volatility indexes spiking to levels we haven't seen in years. For producers, this meant constantly shifting supply chains and rising costs for imported materials. The whiplash was real, and the market reacted with extreme sensitivity to every twist and turn in global trade policy. And number 8, let's talk about tax adjustments and corporate confidence. Even with all the chaos from trade disputes, revisions to corporate taxes introduced a dose of stability. With extra cash on their balance sheets, what do many companies do? They bought back their own shares. This practice, known as a share repurchase, reduces the number of shares available on the market, which in turn pushes the price of the remaining shares higher. It creates a self-reinforcing cycle that lifts entire indices. So while it looked like broad-based growth, a significant part of this rally was powered not by building new factories or hiring more workers, but by financial engineering. Now for number 7, policy uncertainty at a century high. Think about that for a second. Analysts who tracked a metric called the Policy Uncertainty Index found that it reached its highest levels in over 100 years. In this environment, markets have become hyper-reactive. They don't just react in days or hours anymore. We're talking minutes. A single official announcement or even a post on social media can trigger massive swings. This has created a new playground for traders where both profits and panic happen at lightning speed. The constant guessing game about what policymakers will do next has become a central feature of today's market. This brings us to number 6. Volatility is the new normal. The price swings we've witnessed recently are on par with what you'd expect during major global crises. The market's mood can flip in an instant. As a result, many traders have abandoned their long-term strategies in favor of rapid short-cycle bets, trying to catch these quick up and down movements. Here's where it gets interesting. When fear spikes and those big AI stocks take a dip, sophisticated algorithms often jump in and buy the rebound before most human investors have even had a chance to process the news. The machines are playing a different game, and it's happening faster than ever. Halfway through at number 5 is a reality check I call the uneven rally. That 18% headline number is impressive, but it's also very misleading. If you were to remove the handful of largest, most dominant companies from the index, you'd find that the vast majority of stocks have barely climbed 5%. In fact, the median company's growth is hovering near just 1%. So while the economy appears incredibly strong on paper, its foundation is actually a very thin layer of tech-driven prosperity. The wealth isn't being spread evenly, it's being concentrated at the very top. At number 4, we find strategic corporate deals. This isn't your typical M&A activity. We've seen some highly unusual partnerships and equity exchanges that have given individual stocks a significant boost. For example, major players in the chip and steel industries have benefited from special agreements linked to government incentives. In a way, targeted government support has acted as a form of market stabilization, propping up specific sectors and companies that are seen as strategically important. These deals have created pockets of strength that contribute to the overall rally even when the broader economic picture is mixed. Sliding into the number 3 spot is the global comparison. Yes, an 18% gain is fantastic, but it's crucial to look at the bigger picture. When you zoom out, the U.S. market is actually trailing some other developed nations. Countries with more stable currencies and stronger export cycles have managed to outperform the S&P 500 during the same period. It's a powerful lesson. A headline-grabbing record doesn't automatically translate to global dominance. The performance of the U.S. market is just one piece of a much larger and more complex global puzzle. Now for our runner-up at number 2. The AI 7 dominate everything. We touched on this earlier, but it deserves its own spot because its impact is just that massive. There's a group of about 7 mega-cap tech companies, and their influence is staggering. If you were to exclude just these 7 names from the S&P 500, the remaining 493 companies would show only a very modest rise. AI hasn't just created a new sector. It has created its own microeconomy within the broader market. It's pulling in capital, talent, and investor attention with the gravitational force that is reshaping the entire investment landscape. And finally, the number 1 force driving this post-election rally is simply investor faith despite fear. Through all the chaos, the volatility, and the uncertainty, one thing has remained constant. Domestic and foreign investors keep pouring money into U.S. equities. Why? Because underneath it all, they believe in 2 fundamental truths. There is still plenty of liquidity in the system, and the growth potential of AI is simply too powerful to ignore. The market may shake, rattle, and roll, but deep down, confidence in these core drivers is still holding the foundation together. It's a belief that for now is stronger than all the fear. So there you have it. The 10 forces shaping this incredible and incredibly complex market rally. It's a mix of genuine innovation, financial maneuvering, and a whole lot of faith. What do you think is the biggest driver? Let me know down in the comments. Thanks so much for watching. If you found this breakdown helpful, please give this video a thumbs up and consider subscribing for more deep dives into the markets. USA News. Have you noticed the market lately? It's a strange mix, isn't it? On one hand, we have all this global tension, rising costs, and shifting trade policies, things that should make any investor nervous. But on the other hand, the very same technology driving this uncertainty is also pushing valuations to new highs. It's a market that feels both incredibly fragile and absolutely fascinating. It's like every era gets the market it deserves. Today, we have machines trading on human emotion, pricing risk while algorithms quietly script the next big move. Beneath all the flashing charts and complex data, a single truth is emerging. Progress and uncertainty now move hand in hand. To be an investor today is to learn how to live with both. Thanks for watching. If you found this analysis insightful, leave a like, share your thoughts below, and subscribe for our next deep dive into the hidden forces shaping our world.